Hey, welcome back to Harvesting Income. If you're new to the channel, this is all about how to make and grow your income. It's all about income investing. And today we're going to talk about how you can make income out of Bitcoin, or even address the question, can you really make income out of a Bitcoin fund or an exchange traded fund? So here, before I get into the details of it, how it works, I would first like to tell you to read a little bit about Bitcoin or cryptocurrency. And in this video, I may not be able to go into that, but I'm going to share some links below where you can go and get more information. So one source would be Investopedia, where you can learn about Bitcoin and also a Bitcoin exchange traded fund. And also, I'm going to share one of my previous videos where I talked about exchange traded fund. So some of you who are not familiar with that, you can look at that video where I talk about buying an exchange traded fund versus buying a stock or picking a stock. So, so with that said, let's get on to the next section. Can you make income from Bitcoin fund? So that's what we are going to get into straight away. But before that, I just want to make a quick disclaimer. All the content and all the information presented is for knowledge purpose only, and nothing here is like investment advice or financial advice. And do your own due diligence or consult with professionals. Uh, First, to answer the question, can you really make income out of Bitcoin fund? Yes, it is possible. And right there on the screen, you see the name of the fund too. That is Purpose Bitcoin Yield Exchange Traded Fund. So this is just one example because this is one of the earlier funds that has been in the market for about 2 years or more. So I'm just taking this as an example to explain how it works. But today we have a few other exchange traded funds that have come up in the last 1 or 2 years. Um, so how does it work basically? This fund is an exchange traded fund which invests in Bitcoin. So basically, it provides exposure to Bitcoin through another fund within the same fund organization, which is called the Bitcoin ETF fund, which is BTCC. So they basically invest in BTCC, which is a Bitcoin exchange traded fund. So Bitcoin price goes up or down, the fund price also moves in accordance with that. So you get the returns in terms of the Bitcoin price movements using BTCC. And what this fund, yield fund, does is basically they buy the BTCC in their portfolio and write covered calls on the same portfolio to generate income. So basically, this fund uses covered call strategy to generate income, and for the investors or the end users, like there's no need for any wallet or any special custody to hold those bitcoins. So if you are really holding the physical Bitcoin, you need to have safe custody, you need to have a cold storage wallet, and so on. Um, that is a separate topic. You can always read that in the links that I provided you in the video earlier. You can go to Investopedia or any website to know about how Bitcoin is stored safely. However, this is for people who are not comfortable taking direct exposure to the Bitcoin but want to get a fund-based exposure and generate monthly income. Okay, so this is the first base that we have. It basically provides you the exposure in terms of the price appreciation or depreciation in the Bitcoin. Plus, you also get monthly income. And so basically, the fund provides exposure to Bitcoin by holding the other fund, which is the BTCC, and they sell covered calls on a portion of the portfolio. So they don't sell covered calls on the entire portfolio. I will tell you the exact percentage. It's somewhere around 10 to 50% they sell the covered calls to generate income. And there is a pro and con of this strategy. Um, as I mentioned here, like the strategy can reduce the downside risk because you're earning premiums. So when the price of the Bitcoin comes down, the fund also falls down. But due to the income generated from the covered calls, you are making a little bit of gain to offset your losses from the price, downfall in the Bitcoin. So basically, it kind of reduces the downfall risk and it reduces volatility. But at the same time, when the Bitcoin price rallies or goes up dramatically, your upside is going to be limited because let's say Bitcoin price goes up by 50%, but your premium income or the calls are written about 10% above the current price. So your upside is capped up 10%. So you're not able to get the full appreciation up to 50% price appreciation of the Bitcoin. And this is just an example. Uh, Price appreciation or future prospects is very difficult to, predict. That's one of the key things to remember before you invest in this fund. So there you have the strategy. It is pretty simple. Um, so you don't have to do it yourself. Fund managers or the fund does it on your behalf. So there are professionals who are actually doing the work for you. All you need to do is you have to stay invested um, for the long term. And let's see how it works actually. This already I explained it, but this is how it's been explained in the fund documents. On the right side, you can see the graphics. So basically, the portfolio purchases Bitcoin ETF, and they override covered call options on 10 to 50% of the portfolio, which means out of the 100, about 10% or 50% maximum is what is being written in the form of covered calls. So that covered call portion is going to generate income. And the other portion, the balance part of the portfolio, has full upside to the Bitcoin. So basically, what's happening is, on the one hand, you are limiting your upside and you're generating regular income. That's point number one, generating regular income. But on the second side, you're also having some part of which is not where the portfolio is not written, like the underlying asset is not being written in the form of covered calls. So the balanced portfolio has full upside potential. So assume, let's say, half of the portfolio is being, used for covered calls. So the other half will get the full appreciation. So if the Bitcoin rallies by 25% or 30%, you get the full upside for the other half of the portfolio, which is not written. But for the covered call, which is written, you get a limited upside. So you kind of get a balance of both worlds or the best of both worlds. And for someone who is not able to stomach or manage the volatility of Bitcoin, this is a very good option. And the returns here will be in two parts. One would be the distributions of income generated from the premium by writing covered calls, which is the yields. And the second would be the price appreciation of the underlying asset, which is the Bitcoin itself. The price appreciation of Bitcoin is captured. Plus, you also make income from the regular covered call writing program. So this entire information is from Purpose Investments. So this is the way this fund works. Each fund has a slightly different strategy. So before you choose any fund, make sure you look into the details of their specific strategies. Like so, that's the reason I picked one fund so that I can explain to you the nuances of those strategies. And what happens is you can hold it for long term, or when you see a price potential, price appreciation, you can sell a part of it because it's an exchange traded fund. You can always buy, sell anytime. So you have that flexibility. That's a very big plus point. Whereas if you have to trade in the real Bitcoin, although it is liquid, but you need to be very aware of how the market works and how to keep track of prices. There's a lot of moving parts to it. But since the fund managers or professionals are taking care, it's relatively easier for you. And let's move on to the next section, which talks about the brief metrics of the fund. Basically, the fund has a ticker symbol BTCY. It's traded on Toronto Stock Exchange, and probably it's also available on other bigger markets like NYSE and other US markets. And the fund is the Purpose Investments, which is the fund manager. The price of the fund is about $8.81. All these numbers are in Canadian dollars. Just keep that in mind. And the management expense ratio is a bit higher. It's 1.29%. Um, However, some people justify saying that it's providing double-digit returns. And also there is a regular covered call writing taking place. It's an active fund. So it has a higher cost. That's something to keep in mind. And you get the dividends, every month. So previously they have been paying about 5 cents, around 5 cents from March to October, and then recently they started paying 8.5 cents since November. We are in the month of November now, so the dividend has increased, and we will also look into what is the dividend yield to know exactly how much the fund has returned in the last 1 year. Uh, let's dig further into it. Okay, when you look at the price returns, before we go to dividend, let's look at the price performance. There's a lot of data here, but I would just like you to focus on these two areas, the year. So we have year on the first column, 2024, 2023, 2022, 2021. So this fund was launched somewhere around December 2021. So we can ignore 2021 for the time being. If we start from the year 2022, you can see that the fund lost more than 63% in the year of 2022. And in the next year, 2023, they gained about 109%, almost doubled in value. It's doubled in value basically. So that's the kind of volatility you can expect from this fund. Um, Having said that, this is what you expect in cryptocurrencies. They are highly volatile, and this is something that you need to be prepared for. And if this is something that is not suitable for you, please don't invest in this fund. Look at other options. uh, you will have these volatility and risks, but compared to investing directly in the Bitcoin, this is slightly better off. You might be losing in terms of returns, but you're also able to stomach the volatility or reduce the volatility to some extent and also generate income. And next we move to the dividends part of it. If you look at the dividend, like we have to carefully examine what the dividend yield is. When you go to the website of the fund, the stated yield is 11.58%, and that is based on the current dividend yield, which is based on the current dividend, which is 8.5 cents. 0.085 is the current dividend. But if you look at the previous months, October, September, August, and so on, it's about 5 cents, 5.25 cents every month. So the dividends have been a little bit, variable. It goes up and down over a period of time. So it's not right to just take the current number and then multiply by 12 and then calculate the yield. And that's what is giving you the big picture, which is incorrect. Like 11.58% is not correct. So that's why I have put in all the information for you to, uh, get the true picture. So when I look at the last 12 months, the total dividend adds up to 64 or 65 cents approximately. And based on the price of $8.81, the correct yield or true yield is about $7.35 for the last 12 months, like trailing 12 months. So just keep in mind that whenever you are looking at the dividend yield, don't go by what is stated or quoted on the website. Do your own analysis, do your own math. I just showed you how it can be done. Just take the last 12 months and then take the total of that and then look at the price and divide the dividends by the total price and then you get the yield. Pretty simple. So the actual yield is around 7%, 7.5, 8. This can go up and down because the dividends can go up or down. It's not fixed. There's no guarantee or there's no assurance that fund will pay a certain amount of dividend. And in the year 2022, they made very low price returns, and even dividends were low in that period. So that is something to keep in mind. And now we will just sum up and also add a few more information to find out what are the pros and cons, like plus and minus of these funds. And this is specific to BTCY, but you might find similar pros and cons for other Bitcoin funds, and each fund is different. So I'm going to quickly, summarize the pros. The pros is first is you get a Bitcoin exposure plus the income. So that's a plus for you because you're getting a regular income which helps you, contain helps you manage the volatility and also be comfortable with investing in the asset class. And you are also relieved from self-custody of the Bitcoin, like there is a fund or a manager taking care of that. And you have diversification into an alternate asset class, like some people like gold or silver as alternate assets. Some people like Bitcoin or Ethereum, and these are liquid or listed on the stock exchanges. So it's easier to buy, sell tomorrow if you decide to sell or you want to, liquidate for the need of money. You can always sell and come out of it. There's no, um, lock-in period or anything tying you up to that investment. And this uh, fund has a lower volatility compared to the underlying asset, which is the Bitcoin. But still, it is highly volatile. So these are the pros, and I'll quickly list down the cons. It has a very high expense ratio because of the frequency of trading and activity involved, 1.29%, and limited upside. Any covered call fund will have a limited upside, so that's a drawback, and high volatility and high unpredictability. And the unpredictability is not only the price but also the dividend yields are not that predictable. It can vary, and it's a new asset class with limited history. That's very important to note. And variability of yields, as I mentioned, the dividends vary, and there is also a currency risk, which is mitigated to some extent by hedging by the fund. So the currency risk exists. Sometimes it is hedged by the fund, and there is also unhedged version of the same fund. If you like the unhedged version, you can go for that. But there is a kind of risk. The risk can either work positively or negatively, depending on how the currency exchange rate moves. If the US dollar is strong, you are benefiting from that. But if the dollar weakens, the US dollar weakens, then that can, lower the value of your final holdings. So these are the pros and cons of this exchange traded fund. I hope up to now you might have got a very good idea of how this fund works or what are the pros and cons. And if you like what you're seeing, just feel free to subscribe or like or share this video, and also drop in your comments below. If you have any questions or any feedback, happy to listen to you and try to answer your questions or queries you may have. As we move further, like uh, who should consider investing in BTCY, or who is it suitable for? See, this ETF is designed for people looking to, make a regular income from Bitcoin exposure. So that's the whole premise of this fund. Uh, and also you also get the benefit of price appreciation from the Bitcoin. But the downside is your upside will be capped depending on the how the calls are written. And thirdly, you have to be comfortable with high risk and high volatility. So if you're not able to you know if you're not looking for these first three aspects, this fund may not be for you. And even if you like the income and the price appreciation, but you're not comfortable with the volatility, then again it's something that you need to give a second thought, like, because it's going to be highly volatile. And you also have the ability to diversify in a different kind of asset class, which is not linked to any fixed income market or equity market or the economy. The cryptocurrency market functions in a completely different way. It's completely dealing to the mainstream economy. So that's something that makes it an alternative asset class. And last but not the least, I just wanted to make a point here. Because of the volatility, high risk, and because it's a new asset class, various reasons, experts, especially financial advisors and even investment experts, recommend only up to 5% of exposure in your portfolio to Bitcoin or any Bitcoin fund. So I would say one can go up to 5% of your overall portfolio into the Bitcoin, or you can go up to 10% if you're more comfortable. You can gradually move it up to 10%. But at the moment, it cannot be a main part of the portfolio, or it cannot be the core part of your portfolio, because we are still early stages and we're still learning how this works. So depending on the comfort level, you can choose how little or how much more you want in terms of exposure to this asset class. So I hope you like this video. Please feel free to share your comments and feedback below, and have a great day. Thank you.